numbers that have come in as of May of 2023 indicate that economy is showing green shoots of recovery from UPI to PMI. Everything, Karthik, in line with what we've been discussing. It's a good start to the year.
Better than expected, in line but positively in line. So yeah, I mean, numbers have been coming out every day, and numbers, not surprisingly, are good. And I mean, you know, at the cost of sounding a little jingoistic, I think, yeah, India has pretty much arrived on the global scene, and we are doing better than every other economy possibly in the world. And compared to Pakistan, I mean, you know, Pakistan has seen inflation of 37-38% last quarter. Compare that to the modest inflation numbers that we are seeing, or even growth. I mean, we are living in an economy, in a connected economy where Germany has gone into recession. We've seen what's happened with Sri Lanka. We are seeing what's happening with Pakistan. Our neighborhood, the West, far West, US growing modestly at what, 1.2, 1.3%. So yeah, apna time aa gaya.
And not jingoistic at all. In fact, to be nationalist at this point in time, I think we've fared very well. You know, better than most developed economies and most developing economies.
The word I'd like to use is realist. You know, a realist looks at real data. A realist looks at data that's not, hyper hyped up or etc. etc. And as Karthik was talking about, look at the basic data. Whatever be your political standpoint, because this is Karthik, economics has become politics. You know, you talk economics, then you're identified as which political leaning do you have. Now, without any kind of political leaning, you can look at these numbers, and somebody with a sane mind, without any kind of bias, will look at these numbers and go, "Oh my God, these numbers are good," especially because the context that Karthik was talking about. Economies big and small, developed and undeveloped, are going through an absolutely torrid time because of the levels of uncertainty. I'm not saying every economy is in recession. They say US is on the verge of a recession. Germany, they say, is just slipped into a recession. But Germany, despite slipping into recession, is doing much better than so many other economies. So it's all relative. Fact of the matter is that the only point that this drives home is the matter that India is the most resilient economy in the world. India is the fastest growing major economy, is a cliche that we all know. And then we do not have too much competition, because as a major economy, nothing is more major than India in today's world. What do you mean by fastest growing major economy? But what's actually important is that India is actually resilient to all the headwinds and the tailwinds of the global, connected global economy that we belong to. So, you know, in that sense, despite the headwinds and tailwinds, if you're able to put up that kind of GST numbers, 1.57 trillion rupees of GST collections in the month of May, that's the 5th time GST collections have crossed the 1.5 trillion mark. So India's biggest tax reform is booming. People are, you know, signing up and paying GST and filing their returns. That's a very good sign. It's the kind of trust that Indians seem to be having in the economy as well. That's important. And of course, the auto sales numbers tell a story. Great domestic sales despite exports taking hit, but you can't blame the auto industry for it because exports have been down across the board. So auto industry is just a part of it. So the numbers do tell a very good story. Yes, you can say our growth rates are not 8%, 9%, 10%, which we ideally should be. It's about 6 to 7%. But in this environment, with the size of the economy and the complications that India has, to do 6 to 7% itself is very good.
Let me play the devil's advocate at this point in time.
I wanted to do that. But anyway,
I am going to do that and then do that.
I think I bring out the devil in both of you.
So, talking about specifically GST collections at a record high, but also due to a low baseline effect. And what many would also say...
Low baseline effect and inflation.
And inflation.
You're buying the same products, 5% too expensive, and hence your tax collection is 5% more.
Okay.
Right. So you've been maintaining the 1.5 range for the last 5-6 months now. In fact, we've been on top of 1.4 lakh crores for the last 14 months. Right. But we've also seen successive month-on-month inflation. Inflation has ebbed a little bit now, but you are seeing the base effect and you're seeing the inflationary effect both.
And if I might go back to what Karthik was saying to just counter him with his own point. Inflation is at a high up by India's standards, but it's still lower as compared to so many of the economies in the West. You're talking about 10% inflation in the UK, near double-digit inflation in the UK. Imagine if you lived in London. Sounds like a dream for every Indian in every big city wanting to move to London. You're going to die paying those bills.
Yeah, but then also you're earning equally more. The per capita income. Exactly. Unless you're paying in rupee, unless you're traveling abroad and paying in rupee.
That would be a product of cost of living. And if you see every developed economy, even a city like Singapore has one of the highest cost of living, beating even London. That's in comparison to what you get as a salary. And the cost of living in India still continues to be one of the lowest in the world.
Purchase power parity.
So,
I have nothing to disagree on. Especially if you're not living in Bombay, or you're not living in Bangalore. If you're living in Noida, you're still not paying as high as if you were living in Delhi, in main city of Delhi.
If you're living in Bombay, you should just automatically believe that you're in Tokyo. That's what you should believe when it comes to buying property.
See, I think to just bridge it, it is very simple. We are growing faster than the rate of inflation. That is real growth.
Right.
Look at UK. UK has inflation of 10%, growth rate of barely just about 0.2, 0.3% is the growth rate, right? It's a state of stagflation. Look at US. Inflation upwards of 6%, growth rate of 1.2%, stagflation. Look at Germany, forget inflation, negative growth.
Recession.
2 consecutive quarters, recession. So as long as we are growing faster than inflation, we are overall doing better. The report card is green.
Yeah.
Okay.
If I may add a cricketing analogy to it, just the recently concluded IPL finals, when Chennai Super Kings was bowling in the first innings, it seemed as if Ahmedabad was going great guns. They were smacking the hell out of every delivery. They have the biggest score. But what I could notice at the time was MS Dhoni knowing that they're going to hit, this is a good pitch, but they should not hit more than a particular level. So India growing slow might seem bad, but India not growing slower than what it could is in itself good news, is the point I'm trying to make. Yes, 6.2% is not a great number for GDP. That's not the number we're looking at. It's not the potential that India has. India has potential to grow in double digits. We're hoping that when you come out of the entire pandemic and recession and the global economy improves, we were able to hit those double-digit figures. But the good news is that in these bad times, how well are you doing? That's the story, corporate lesson you learn from Chennai Super Kings.
Absolutely.
You have an entire season, you're going to lose matches, you're going to win matches. It's all about how you keep it going to make sure you win the trophy in the end. And I think India is still up for a trophy. As far as being the best,
my only concern with that analogy is that there is no match here and there is no equal play. I mean, everybody is growing at their own.
Oh, IPL, so many people complain about lack of equal play.
Lack of equal, at least there's no fair play.
No, so let's look at our 11 players in this whole economic cycle that we are in, right? And Prime Minister downwards till RBI Governor, look at everybody. I think we've been fairly prudent. We've been prudent. I wouldn't say we've been extremely aggressive, but we've been prudent. We've done supply side reforms. When we knew demand was dwindling, we have done supply side reforms during COVID, right? We built infrastructure, government spending, a major contributor to GDP growth. We have spent, when corporate sector was reining in its animal spirits, the government said, okay, let's loosen the purse strings, let's go ahead and spend. Unlike the US, we have not printed currency. Easy money. You were talking about free lunches, easy money. RBI did not go on a rampage printing money to offset the short-term impact of a COVID-like situation or even the supply side, the supply chain issues that cropped up because of China's zero COVID as well as the Russia-Ukraine war. We didn't go ahead and print money when difficult times dawned upon us. We've been hawkish on our interest rates, but when we saw inflation was coming under check, we paused. We did not blindly follow US Fed, right? And there's one more point I wanted to add. Anyway, I'll come back to it. So broadly, I think, we've played the innings well. It was a difficult pitch. It was a difficult field. You didn't have the best cheerleaders across the world, thumping victory for you. But we played the innings well. We've survived, we've thrived, and we've come out of the shadows of whatever the world was
I'll give you another analogy
against us.
In football as well, Manchester United. I mean, yes, we don't have Sir Alex Ferguson as a coach, not those glory days, but the fact that they're able to end up in the top 3 in the league this season with a brand new coach. We might say that, oh, Manchester did not win the season this time as well. But the fact of the matter is that in that time, that transition time, the worst of times, they've managed to eke out better results. And usually what happens is that when the times are better, you do better than everybody else. Because you did better than everybody else when the times were bad.
And I just recall the last point, buying Russian oil. I think the smartest thing to do. You've been able to avert sanctions, but you've seen OPEC plus cut fuel production, right? So you've been able to exploit a situation to your advantage by procuring oil, procuring it cheap, bypassing sanctions and sticking your neck out and saying, hey, I need to protect my interests,
my people, my
and
country.
Not really fight a war that you expect it to be mine. It's not my war, it's your war.
Absolutely. And to sum it up, India still remains the bright spot amid global gloom and doom. We will, of course, have to wait and watch out for whether that's going to be the condition 6 months down the line. It is a crucial year, right before general elections next year. The government will have to, of course, keep up the momentum of economic growth, and it has a very, very heavy task ahead of it.